Well, shares of Zoom are up after the company reported a beat on profit and revenue. And as analysts are looking at their development in AI features for sustained revenue and profit now that demand for the communications platform has dipped since COVID. Here to talk more about it is Catharine Trebnick, Senior Research Analyst at Rosenblatt Securities. Catharine, thanks very much for joining us.
Well, you're very welcome. Thank you for having me today. And happy Thanksgiving.
We will take it. We had our Thanksgiving a month ago, but we always want to celebrate with more turkey and with our good friends to the south of the border. So.
Okay, thank you.
Zoom, some good numbers to see there.
Yeah, they really had a night. They delivered a clean sweep across revenue. They beat by 60 million, EPS by 8 cents, margins. My margins 130%. And then basis points, and then free cash flow at 50% free cash flow margins. I mean, it's incredible. You know, I think it's really a quarter that shows that the company is showing real product momentum, real AI adoption, and their maturing channel strategy is really kicking in. So, plus they raised guide for the year across all those key indexes.
And what are some of the new products that you're liking and are helping drive this?
Well, okay, so roughly I estimate 20% of the revenue is with the cohort group that they've been aggressively developing. So the Zoom Phone is roughly 10% of revenue. That's growing roughly 15% year over year. The newer product introduced in 2023 is the contact center. They discuss that in growing in high double digits, so I'd say roughly 90, probably good 100% to year over year. And then the contact center is really one of the ones that I think is really helping them drive the AI innovation. They talked a lot about how their newer products are on top of their contact center and helping them win deals and position them. And then they have what they call Zoom Companion AI that quadrupled year over year. They landed 2 new customers with that, expanded them actually with Oracle and Salesforce. And then the other product is Workviva, and that product they've actually partner or are taking a lot of Meta's customers and transferring them over. So those are 3 of the main ones that are, I think, driving the growth. And then when you talk to the channel and you ask them, how are they really positioning, you're hearing that that the R&D piece of the puzzle and the aggressiveness and their ability to translate that technology quickly into a product or feature to help them land larger customers is really helping them out. So one example would be like there's a huge RFP out. They'll say, oh, Ring and NICE and Cognigy are number 1. Zoom, you can't do A, B, or C, or D. And Zoom will come back and say, oh, I can do A, B, C, and D, and I can deliver that to you in the next 2 quarters. Then the company goes back and asks all the salespeople and the channel people and the service people, can they really do that? And they say yes. So I think that that's an untold part of the story is how aggressive they are in R&D, how they've really matured the channel. And then in terms with the R&D, they've also been very profitable, right? So I think that's another thing that's underrepresented and undervalued in the stock.
Now, with the channel, what makes them so good at it, do you think?
Well,
is it their leadership? What's driving it?
Yeah, they brought in they've had fits and starts with the channel over the years. I was rather frustrated with them 3 years ago. In the last 2 years, they brought in a lot of deep expertise, right? The company started out online. Everything was done online. They now 60% of the revenues from the enterprise. And what they've done is they just retooled the program. What they did is they took everybody out of California a year ago, said, oh, you have to be regionally. If you're going to be a channel guy, you got to be in the region. So they put people in region. They redeveloped their sales portal. They developed how they're bundling a lot easier for pricing, et cetera. So I think those are things that have really changed. And then they've just been aggressive in how many products they have. And they're easy to work. They're much easier to work with than they were almost 2 years ago to move things forward. So I would say the channel enablement, the ability to do these things quickly, access information, bring it forward for an RFP process is really what's helped them out.
It's been quite the transformation. I mean, everybody learned about Zoom during the pandemic. Their numbers spiked, and now people would say, well, it's down, but it's almost back to where it was value-wise for their stock, isn't it? Prior to the pandemic.
Yeah, I would. It's no longer a pandemic stock, right? It's really shifted to an AI story. So it's AI first automation platform, I would say now. And I think that the fact is that they have growing new businesses, they have expanding margin, they're generating a tremendous amount of cash. We didn't talk about the $8 billion on the balance sheet.
We can talk about it right now.
Yeah.
Well, they've raised their guidance for 2026 and a $1 billion buyback.
Right. So I would say my take is that I see multiple growth engines that are firing. So the cohort groups, Zoom Phone, Contact Center, Workiva, and all their other products are actually doing quite well, AI Companion, Chat, etc. So I think if there's a really good setup, and I believe that the valuation doesn't reflect where they're headed. So that's my take on the stock.
All right, Catherine, thank you very much for joining us. We appreciate it.
Thank you.
Catharine Trebnick is a senior research analyst at Rosenblatt Securities.